Just want to have a look at the volume for the S&P 500 on the weekly chart. And as I mentioned last week, we could see that a couple of things here. We could see that the market moved up here on lower volume. That's divergence, obviously weakness. We could also see here too that we could see the volume increasing on the weekly chart through all of this period through here, but we didn't really see the price move up at that point, or down. So really that's where the front line is, that's where the battle is, and we're not, that battle is not completed yet. We're not on that. If we look at just the open and closes here, it's a little bit wonky, but it does give us a line around the 41 sort of 50-30 sort of area there. We would need to see the market on top of that. Now we've seen last week it actually closed lower than it opened, not by much, but a bit, but it also closed on lower volume as well. So when we have corrections in the market, as a correction coming down through to here, we would expect it to be on lower volume, because then we know that, well, corrections are on lower volume, and we know that the volume in this case is confirming the price action. It's just the same as if I was going to go long down here, I'd want to see increasing volume to the upside, and then that would confirm the trend. So we've had a correction basically last week to a point, and it closed, if it had closed lower on higher volume, then I'd be in a concern and I'd be looking at more downside. But because it closed lower on lower volume, it's telling me that that's still part of a corrective bar. Now we could still have more correction within that space, not a lot, but some, before we push up. So the battle for the bulls and the bears here is not completed as yet. With the NASDAQ, because we're looking at NASDAQ stocks, excuse me, we can see that we've still got wave 1 here with an ABC for wave 2. I've extended this up here a little bit further in terms of 1 and 2 and 3 and 4, and then 1, 2, 3, 4, 5 here. So I believe that we'll have an A and a B and a C here, and then we'll push up at that point. Because Friday didn't close firmly and strongly, then Monday's unlikely to follow through on that. So Monday's going to give the same sort of thing as well. So we'll see it move up a little bit, we'll see it move down, then we'll see it break even again. So it's going to be a rather flat day, but the subtlety is that the 13,000 is a major level, then 1, 2, 3 is the minor group 1, and we want the market eventually to settle on support at the 300 here, the top of minor group 1. So normally when we trade above group 1, we can allow the market to spike down to 1.5 here, so 30,150, or 30, it doesn't really matter, just a spike down, and then it needs to recover and find support here and find support here. When you see it with support here, then you know that you can move to the upside. One of the main weaknesses in the market I still see is the banking sector, and we're seeing BAC move down. We're going to have a look at the regional banking sector at the end of the video when we look at the banks. Tech stocks are still pretty positive, so we're still seeing impulse waves to the upside and corrective waves to the downside. So with Apple here, we should see it move up. It's got a I know that most people don't like corrections, but really when you think about it, I mean, because corrections are where, you know, markets take your money and so on, so we don't like them, but in a way it's where the next trend is engineered from. So it's the accumulation process, and you need to make corrections your friend. So if this top is taken out, then we'll see a move to 180 at that point. Now, because that's the top of the market and we have a little 5-wave structure down here, we may get another little move down here before moving up. But because this is corrective in here and not really impulsive, I believe this is part of an A and a B and a C wave here for wave 4. Wave 2 was nice and sharp, wave 4 sideways and complicated. So I think we're on the right track, but buying new highs would keep you safe on this one. And Amazon had a nice pullback. We talked about We talked about 110, 10 being, well, number 1 here being the strongest number in the market. And then we also talked about the swing range, which is group 1 above, which is 1, 2, 3. It didn't find support here, the classic trading levels pattern here. So the swing range is from group 2 to group 1 here. So that's where that is. Now I can see that I can put this as a little ABC here, but I'm probably grasping at straws a little bit with that ABC correction. It's possible, plausible, and it's pulled back to about the right space as well, but can move back further as well. So also too, I've got blue wave 3 here. It also can be green wave 3, but you don't have to really worry about that at this point. So there is the possibility of this happening. Okay, so just be a little bit aware of that. So I guess a nice tested support on top of 12 would see you to the upside. If it pulls back here, then look for a classic trading levels pattern on the 110 and start to build in at that point, and then build in on 11, 12, 13, and so on at that point. But we still got, this whole trend has still got a fair way to go to the upside. Okay, we're just doing a dance at the 110, 1 being the strongest number. Once that's done, we'll be up at 120 here. Don't worry about that wave 5 too much, because it's there's other counts, but all the counts are positive. Okay, so that's that's that. And NVIDIA. So as you know, I've always had this little move here, which I wasn't really sure about. So I'm going to look at it now as 1, 2, 3, 4, and 5 here. Now it's probably not correct, and I'll sort of readjust it a little bit. But I do have a nice ABC correction in here with the A wave here, the B wave here, then 1, 2, 3, 4, 5. Yes, there's a bit of overlap there and those sorts of things. But got to take things with a bit of pinch of salt. The main point is that we're seeing impulse waves to the upside, and we're seeing corrective waves to the downside. So the trend is still up. And so it's really just coming back and testing these highs here as support. Now it's sunk deep into here and pushed up, and now it's going to come back. Now it is back and testing this. So we should see, I mean, with the NASDAQ, as I mentioned, the NASDAQ was going to do this, so that may do this as well. But we should be pushing up here in due course. And meta platforms. We've been looking at this in a couple of different ways, but we got the turn. We were looking for it to move down. We watched it move down. We could count these as 1s and 2s to the upside, but we weren't going to trade this because, the B wave here was roughly the 61.8% and also the supply zone here. So it's been pushed down. So look, it can, it'd be nice to see it come down, just take out that low. But anything can happen. If you see strength here at some point, then you can go for it. It'll take you up to 250 next time around with the market. It'll probably move with the market. But this as a 3-wave move here, it's starting to be a little bit complete. But I'll just be a bit careful. We haven't taken out the low here yet, and there's no relationship between wave C and wave A in terms of length. So we could be, it could be some sort of rally and then 3, 4, 5 here, that type of thing. So we'll just keep monitoring it, and sometimes they run away on you, because it's good it's good to have the ability and patience, the patience to allow corrections to really mature, and then you still need to, because the more the mature, the more that you've got a chance of recognizing certain aspects of them. And we've all got our favorite trade setups and things, and you really just need to wait for those. And if the market takes off and leaves you behind, well, that's okay too. That happens. But you really need a safe setup trade to manage your exposure. So you sometimes just need to wait, and that's what we're doing there. Okay, so Netflix. So I'm a bit concerned about the size. We had this here as the A, the B, and the C here. A little bit sort of flimsy, I guess. But the thing that's sort of starting to haunt me here a little bit, everything's going okay, but this B wave here, or this wave 2 that we've had here, is really quite big compared to wave 1 here. In fact, it's too big. So I think that we need to be very cautious, and we're going to take some money off the table when we come into above the 350 next time. Okay, so we'll probably end up with some type of, like the NASDAQ, will be something like this. And then we'll probably see 3, 4, 5, something like this here. I'm not quite sure, but we've got 5 waves here. We've been counting through all of that. We're keeping the stop out of the way. When the B wave comes in here, you can take a percentage here on the B, any little rally here. It'll probably come back to the 330. And then we're going to take the money off the table anywhere above the 350, 355, that type of thing there. Because if this is too big for a wave 2, so it's more likely this whole pattern here is going to be an A wave, an ABC for the B wave, and down for the C wave. I mean, this high here is already at the 61.8% from top to bottom. 61.8%, so we can go to 65 to 72, 78, somewhere, anyway, somewhere where, you know, where the rubber hits the road with this resistance supply over here with that. So probably 360, 362 tops. So getting out at 355 and 358 would be reasonably safe at that point. So we'll play that game at that point, and then we'll just get out and watch. I mean, it's not going to go far past this supply here anyway. Do you know what I mean? It's not going to be, well, it could easily be proven wrong. It could just, you know, blast on through for some particular reason, but we need to play the numbers game and the odds and the percentages and so on. And realistically, you know, it's not, you know, this is going to be a bit of a, you know, resistance area through here. That's more of a selling area than a buying area. So we can just, you know, get out, wait, let it churn, so on. Okay, over to Enphase here. You know, I'm thinking that we're going up. We've got wave 1 here, and we're going up for wave 2. It's possible we've got a low in place, but I doubt it. So yeah, so what we want to do here is that all the corrections have been pretty low. So we've got a couple of little positions in here. We can bring this one up here, stop here now. We can bring that up to here. It does look like this is corrective, so that's good. That's a little 5-wave structure here, 5 waves here. So we're going to get at least one more up here for this, you know. So you can either take profit at that point. The good news is that we're in group 2 here, so from, don't need this line anymore, from 50 here to 200, so we've got 110, 120, 130, 150, 180, and then we've got group 2 here, 65 and 72. So you can see that it's sitting, well, it's testing 65 at the moment. If it takes out that little high here, that would help confirm that that's 165 is done, and that's a very very positive thing. You know, we should end up here somewhere, but because we're in a corrective rally, we just need to be a little bit careful. The other reason we're taking this too is because I mean, nickel's not doing too good, it's bearish, but lithium is doing very well. So that's pushing up, and this kind of in this, I mean, I don't know if it's, yeah, there's a relationship there, not with the, not that I put lithium in their particular product here, of course, but you know, things are connected to a point. So anyway, yeah, it's all sort of pushing up pretty good. So I'm just sort of hoping this is some sort of 1 and 2 and 1 and 2 here. It could be an ABC for the A wave, the B wave here, and, you know, one more up here for the C wave and fail at that point. That's the thing, you know. But once that top's taken out there, we could just about go up to here and protect all of those and take some money off the top. And I just feel that we need to work it. You know, I'm probably, you know, I'm a bit of a scaredy cat when, you know, doing this, but it's easier to look after a profit than managing a loss like this one here. So we've been in here. This has just gotten a little bit more complicated. So Anyway, what we're looking for is we're looking for the 310 to become the support, and we're not there yet. If I look at this as wave one over here, I mean, I could count this up as 1, 2, 3, 4, 5 at here to have one here, an A and a B and a C. I could do that. I could go an A, B, C, D, and E across here as well and put this over here, but we don't have triangles in wave two, so that's not going to pan out. I could put it as wave four. There's a whole variety of things here, but I'm just not ready to budge from here just yet. You know, if we look at the bearish count here for a moment, because I'd always expected it to, because it's normal for it to come back to the 300 here, you know, and drop below it. But it's holding up there quite nicely. So let's just go and have a look at the bigger picture. Let's have a look at the bearish picture and start off with that a little bit. So, you know, this has come quite high from, you know, the previous, you know, what's the name here? You know, is it the recession? We're having a recession. We're going to have one. We have a hard landing, a soft landing. It's out of my scope, all of that. But, you know, wages are rising. There's, you know, unemployment's really low. You know, the only people who are going to suffer really are people with assets. That's all I see. You know, the $10 trillion or whatever it is that was pumped into the system since 2008, you know, is basically coming out, you know, is playing out rather. So here we are, that's the 61.8% here. The next level up here is the 317, 318 is always a nice thing. So up here, the 78.6. So, you know, it's, we can look at this as a bearish pattern here as an A and a B, and we'll have this as 1, 2, 3, 4, 5 here. But I don't like that as an ABC pattern here, because wave one and wave four here just overlap a little bit, so doesn't really sort of hold true. Now I can look at this here as 1, 2, and then 1, 2, 3, 4, 5 for the third, fourth. So I could actually just put this here as a third wave here and a fourth wave here, and then bring this up to one more scope over here. We haven't, you know, normally we would just drop back in here, do you know, like this here. See how that was sort of pushed up there and stayed up there and dropped back and then pushed up? That's what I would expect here, you know. But if it finds that 310 as the support, then it'll push up at that point, and then we'll have to rearrange this in terms of looking at this as like a much more bullish pattern to the upside with wave 1 and 2 here. So there's a few things that can go on here with this. There's yeah, but the main thing here is this well, 1, 2, 1, 2, then a little 1, 2, 3, 4, 1, 2, 3, 4, 5 here for the 1, 2, 3, 4, 5. So it does fit quite nicely there with that. Obviously we can count this as 1 and 2 as well in a bullish pattern. You know, we can look at this in a bullish pattern as well. But it doesn't really make much difference. You know, I've got it as wave 3 here, but 1 and 2 and 1 and 2 and 1, 2, 3, 4, 5 for the third wave. So it doesn't matter if we look at it bearish or bullish at this particular point in time. We still need to get past a few little things, and it's sort of the current situation is at 310 there as support or resistance. So we'll just chill on that. And yeah, so being wave 1, 2, 3, 4, 5 up here, you could say, oh yeah, no, I agree with that rather than the bearish count, or I agree with the bearish count and all the rest of it. You know, I still don't have a clean answer for the market being bullish. You know, I can see stocks like this that can be counted bullish. I can see the banking sector is a pretty weak, in a very weak situation, especially those regional banks. You know, it's pulling BAC down as well. So we've got to bring in the bearish pattern for that, which we have anyway. But yeah, so yeah, there's different ways to look at all of this. This is 1,000 ticks here. This was basically looking at it that way too. But yeah, it's just sort of, and you know, because it spiked here, I can't count within here. Do you know what I mean? I can only count this here and make assumptions and so on. So the question is will 310 become the support or not? Because if it doesn't, then we're going to drop back to the 300 here. And if it gets support on there, then we're going to be looking at it on the 100 tick, counting it bullish to the upside here. We're looking at it as wave 1 and 2 here. I could look at it as 3 and 4 across here as well. I could do that. I mean, because it can really basically, I know it looks quite big here, but it can go to 10, 20, and 30 up here, right? And still come back to 300. It's only when the top of group 1 up here, minor group 1, if that becomes the support, then it doesn't come back here. That's the most, you know, I could say 99% of the time or 90%, or doesn't really matter what percentage. There's always that, you know, possibility that things can happen, you know. Anyway, you can see that the market's trying to get through that 310, just not getting there just yet. And there are different ways to count this. If you've got a different count, that's fine too. But this is the front line here. That's where it's being played out from. Will it become support or not? If it becomes support, then you can start to build in long through here. Okay, that would be that's the go. Okay, so Berkshire Hathaway here, and yeah, so it's the same with the pattern here too. You know, it's quite high up here. You know, the 61.8% is about here somewhere, I think, from eyeballing this here. Oh, a little bit higher, yeah, roughly. So, you know, I looked at this as the A, the B, and the C here for wave 4. That's good. We can look at this as wave 1. Wave 2 is okay, a little bit big. This is a wave 3 here. It's moving along nicely, but it's just too short for a wave 3 compared to wave 1 here. It needs to be much bigger. I could put this as all of wave 1 up here and put wave 2 here. I could do that. There's different things to do at this point, but all we got to do is just I can count 5 waves here as 1, 2, 3, 4, 5 here, and I count this as an ABC, but I don't want to look at this as 1 and 2 yet. I am on the 100 ticks, but I still just want to do things slowly. I just want to figure out, you know, this is a corrective pattern here, so it's in 3 waves, so we should take out the top here. Now, do we take the top out as 1 and 2 here? Or is this going to drop down a bit further? We need to put wave 4 over here as an A and a B and a C over here. A little bit gappy, but it looks like wave 1 here. So when this gets up here, when we do get another little 5 waves here, be it 1 and 2 here or in here, once we get that here, then anything above that, then we can be bullish. But we're away from that at the moment. So on the 100 here, so here I've got 1 and 2, and I've counted it up here as a little 1 and 2 here. But beautiful that it just yeah, but I wouldn't worry about that too much at this point. But the takeaway here is that this move here is in 3 waves, right? So that means that this top will be taken out in due course, and it's confirmed as 3 waves because this here took out the top here. So this is a 5-3-5 structure. So we could look at this as 1 with 1, 2, 3, 4, 5. That's okay, a little bit gappy, but it's possible. Then we'd have to look at this as an ABC here, but it's rather big for an ABC compared to this as wave 1. If we put wave 1 here, so do we put wave 4 over here? Do we put wave 4 here? I'm not quite sure. But we do know it's corrective. We do know that we should be making a new high here at some point. Do we get another little move down here first to take that out? That's possible as well. It's not looking that impulsive here at that point. I could look at that as 1, 2, 3, 4, 5. 1, 2, 1, 2, 3, 4, 5. A 4th wave. Yeah, look, we've probably got probably got this as 1, 2, 3, 4, and 5 here for this, and then up at that point. It's probably something like that. Anyway, that's that. Anyway, the trend is up, you know what I mean? So if you're holding long and stock, you're not got margin that you're costing. So Tesla here, so from the low here, we can look at this as 1, 2, as you know, 1, 2, 3, 4, 5 for the third wave, fourth wave, fifth wave here. We're looking at the 180 to take profit. Didn't quite get there. I hope you got out in time. We had our stop down here on this, didn't quite reach the target here, so I hope you sort of got out on that. But look, the main point here is that we have 5 waves here. The only other option I can see here is that it doesn't count very nicely as 5 waves up here. You know, I could make it happen, but that's kind of like, you know, sleight of hand kind of job really. But so I could put wave 4 over here for this as well, so I'll just be watching out for that. So it's a bit of a long shot, but as an A and a B and a C wave here for wave 4 possible. I'll just keep an eye, but otherwise we need to look at this here as some sort of ABC. We'll just have a quick look in here. Just have a quick look here. I won't burn up too much time. 1, 2, 3, top 1, 2, 3, 4, 5. 1, 2, 3, 4, 5 for 1, 2, 3, 4, 5. 1, 2, 1, 2, 3, 1, 2, 3, 4. That's 5. 1, 2, 3, that's 5, 5. So 1, 2, 3, 4, 5. Not really. Yeah, maybe. So I'd have to go 1 and 2, 1, 2. I'm not sure if that's wave 4 here or B wave here. Not that it's going to make much difference really. I could figure it out, just I don't want to burn up time. So we could put wave B here, we could put wave B over here. It's not really going to make a lot of difference at this point. It can do this and then that as a little wave 4 here or wave B. But if it does come down to here, the 61.8%, then we can start looking to buy back here. But a bounce off here and back to here is not a buy signal. If it comes down here further, it will bounce off here one way or another anyway. We're just not ready, okay? It's just not ready. We'll pick up the thread and we'll get this move up through here for this. But we're just going to look at the next 5 waves up here. That we'll trade those 5 waves up here and then we'll get out. And block here, just looking at this as a bearish pattern last week, and still has further to the downside to go here. We've had this as 1 and 2, 1 and 2, 1 and 2. And yeah, obviously it's going to bounce off here, you know. Yeah, so anyway, it's still not really getting increased volume to the downside with these moves here. Do you know what I mean? So just be a bit careful about that. I'm not going to call the trade in from here, but as I mentioned before, because of this spike down here past this low here, it forces this to be an ABC pattern, and that means that it will eventually take that low out here. So to the banking sector. So this is Morgan's here. Now with Morgan's here, we could count this up here as 1 and 2, and then 1, 2, 3, 4, 5, the third wave, fourth and fifth. So we could count 5 waves up there. So this wave 2 may come down to here, it may be here, all of this type of thing here. If we had 5 waves up here and took the top out, then I could have put wave C here, for example. But I can't do that because it hasn't taken the top out here. So there is a bullish place for this, but once if the 130 becomes the retested resistance here, then we'll be bearish at that point. Okay, so we'll just leave that for the time being. What I wanted to have a look at was the banking sector, which is the regional banking sector, the ETF here. We've looked at this before. Just sort of catching up on it a little bit. So we've had this trend to the upside here, and they had 5 waves up here to finish that off and so on. And then we're looking at this here. We've got 5 waves here and a correction. Then we've got 1 and 2 and 1 and 2 here, and then 3, 4, 5. So we've got from here, we've got 1, 2, 3, 4, 5. So we're not really at that 3rd wave yet, let alone a 4th wave and a 5th wave. There'll be another 2 in here actually. So it's still a fair way just to get these 5 waves down here. So this has still got to come down further here, and then, you know, it's highly likely, because this does not look like a wave C, for an A wave, a B wave, and a C wave here. You with me? So this is telling me that, you know, we're going to get wave 1 to here, or an A wave to here, and a B wave to here, and a C wave to here. So that would be an A, B, C to here. That would be me being minimal and kind to the banking sector at this point. So that's going to bring it. This is going to bring it down to this low here without any problems. Now, as an ABC, that's fine. You know, could it be that this is 5 waves for wave 1, 2, and 3, and 4, and 5 down here for a larger A wave, and then a B wave, and then a C wave? Now, that would be, you know, that would be, you know, a much bigger thing at that point, wouldn't it? You know, obviously. So, but yeah, I'm just saying that, to me, you know, sometimes I don't have confidence in things, and other times that I do. We've talked about this before when we were about in here somewhere. I can't remember exactly. But it was pretty clear then, and it's still pretty clear now, that, you know, we're going to be down at sort of, you know, at $15 for this ETF here, for this. I just can't see a way around it, you know, and and I'm old and crusty enough to understand that, you know, when you've got people, you know, the feds and people, you know, that have interests in their fiat currency and so on, saying everything is fine, the more that they say that, the more you know it's not fine, you know. So yeah, but this is pretty full on here, you know. I mean, if we get 5 waves here, which I really think we're going to be getting, we're definitely, you know, if we get 5 here, we're going to have a correction and get another 5. So this will be down, you know, this will be down, testing these lows down here at $15. So what we'll try to do, you can short it at the moment. You can just have a stop above here, but you're going to be stuck in a whole series of 3s and 4s and 4s and 5s in here. So we'll look at it as catching the B wave over here, and we'll come down here. And when this comes down here, because normally the A wave is quite sharp, and we're getting that sharpness in here, so that's quite good. So it's quite helpful for an A wave, but you know, it's also got the personality of a third wave coming in here too, within, you know, the 1, 2, 3, 4, 5 here. So we'll see. Anyway, I just wanted to point that out, and yeah, so and the time that it's going to take as well when you think about it. So it started here in January 22, and we're already here in where's just January 22, and where's January 23 is here somewhere. January 23 here somewhere. That's like, that was a year to get to there. And then this year, so from here down here to January the 24th, I would imagine, this is when so another year to finish this off here. So that's, you know, 1, 2, 3 years. And then this B wave will be probably 2 years, and then another move down here, which will be another 3 years. So I don't think this is over for like quite some time, you know. Anyway, sorry to rabbit on about that. So we'll just keep an eye on that. So with Bank of America here, we've always known that this here is an A and a B and a C, so I'm just labeling it now as an A and a B and a C. It's either wave 2 or wave 4. This move down through here, I have to look at it as a 5-wave structure. We have this as 1, 2, 3, 4, 5. So I've put 1 here, 2 here, 1, 2, 3, 4, 5, the 3rd, 4th, and the 5th wave here. So at some point here, we're going, it looks like we've got 1, 2, 3, 4, 5 here, a little bit of overlap here. So at some point here, we're going to have some sort of ABC pattern for wave 2, and then we're going to go down for wave 3. So we'll look to short this through here, and we'll capture that here. So from 1, 2, 3, 4, 5. So when we look at this in the bigger picture here, if we go to 210K here, now that we're looking at the banking sector, there's a couple of ways to look at this here, is that I can look at this here as the A wave to here, the B wave to here, then 1 and 2 here, and then down for wave 3 here, and back for 4 here, and then down for 5 here. And wave 5 here would be from this top here will be 1, 2, 3, 4, and 5. You know, we can work out distances and that in a moment, but that would be wave 5 of wave C. So that would be that. So that's being generous. So the A, the B, and the C wave here. So that could actually be the low, and we could go up from here, right? That's possible. The other count from here, if this actually extends down here, and we look at this here as 1 and 2, and 1 and 2 in here, orange wave 2, then this would be 3 down here. So if this move from 2 to 3 here is longer than wave 1 here, then we'll know it's wave 3 at that point. And then we'll have wave 4, and then we'll have wave 5 down here. And then that means that this wave 3 comes down here, and then this wave 4 is over here. And then this wave 5 is down here somewhere. That's the other side to this. So kind of this little, when you think about it, you know, this wave 1 that we're counting down here at the moment, and going back for wave 2, it's kind of important really for a short trade at that point, isn't it? You know. So we're going to look to short this here. How far we get is another story. We'll just take it step by step. So I'll just put these back here now that we'll talk about this more as we go, of course. But yeah, interesting, you know, especially when you look at the regional banking sector. And we could tie this in here. That was pretty much the same, wasn't it? January 22 is when the other one started down too. I mean, obviously they'll start together, but they're kind of in the same, different counts, but in the same boat, really. So this little 5-wave structure here of 1, 2, 3, 4, 5 here, yeah, we'll look at that, and then we'll look to get, this will be about probably, you know, 10 trading days at least to get that wave 2 happening here, perhaps, you know. We've got to figure out the bottom here. Is that the bottom here? Probably close, maybe not in the next session, but one after perhaps. We'll see. Anyway, that's sort of interesting, I think. And then we've got Johnson & Johnson here. So we've been looking at it as wave 1 here, and I really like this as an A wave here and a B wave here and a C wave here, you know, but I think in reality it's going to be a little bit more over here for the A wave here and some sort of B wave here for this, because this is as a wave 2 here, it's as a wave 1 here is fine. As a wave 2 here, it's taking too much time. We've probably got the low in here already. There may be one tiny little more low here, but this is a little bit big in terms of time compared to this. So we really need to go with the wave A here and wave B here. We're already quite close up here, so the 170 is probably where we'll be at with this. It may go up to the 78.6, but I think it's time to remove this as being a wave 2 at this point. It's possible, you know, we've got the stochastics here ready to sort of, you know, they're sort of ready to go. So we will see it move up, but yeah, we'll see how the speed in which it moves up, and we'll get sort of some idea about it. But yeah, it made a nice ABC here. The C wave was a little bit sharp here, I have to say. So we'll probably bring this over to here. this B wave over to here. Might need to take, probably need to take it all up a notch, you know, definitely actually. So what we'll have to do is we'll put wave B of primary degree here. We'll just give that a bit more gravity and put wave A here and wave C over here for that. And we'll put Humpty Dumpty back together again over here. Don't need that, that. So we'll have to move these out of the way. Bring it up, lift it up a scale. Anyway, we'll see. It's kind of good to be on the conservative side, you know. It just sort of makes you think twice before doing something, you know. I mean, if we had this as a wave 3 going up here, you may probably make the position size a little bit bigger than what you would do in this case, and you may not even trade it in this case, you know. But what we'll do here is we'll just look at the speed in which this travels, you know, how what the relationship of the angle to this one here, that will be the personality of the structure. So if it's lazy like me here, then you know, we can look to short that in due course. Alrighty, I'll leave it all at that. I think that's just it. That's the buns. So alrighty, thanks for tuning in. Cheers.